Thank you, Senator Skoufis. Thank you for maintaining your focus over the years on these types of programs. So we all know that smart government is reflective and responsive. It's troubling and puzzling to find out that these economic development programs have been rolling year after year, and this is the first time there's been a comprehensive look at the programs. We spend a lot of money on economic development in New York State. We are told that ribbon cuttings, that subsidies, direct subsidies to employers brings us jobs, brings us investment. But after the ribbon cutting's done, we don't really loop back and figure out what has been the impact of this government spending. But this report lays bare that if New York State was an investment bank, we would be out of business. There's often this mistaken world in economic development that you need tax credits and subsidies. It's like they're all synonymous. But economic development could and should mean many things. We know that the better way to go is not investing in corporations, but investing in our citizens, investing in education. That's economic development. Investing in child care, that's economic development. Investing in legitimate job training, also economic development. So when we think about economic development, we should be directing the bulk of our resources towards things we know can lift the economy. Educating and giving skills to New Yorkers who live in New York, that is our best asset. That is what will grow companies and bring companies. Not just a few subsidies that benefit a select few corporations. So tax incentives should be just one tool that are in our economic development toolbox, but right now there should be many more. So if we're going to utilize these types of incentives, we have to take steps to make sure they're used effectively. The most important thing we can do is add oversight to the process, add analysis and evaluation to the process. Each of these programs should be evaluated regularly. The independent analysis that was unveiled today, it'll help us identify which of these programs can be considered successful and which can be considered, frankly, a waste of taxpayer dollars. Once we determine what's working and what isn't, we could and we should adjust accordingly. Part of that adjustment is making sure that programs are designed in a way that makes them more likely to be successful. So step one is being clear about what they're supposed to accomplish. Not every government program can be judged by return on investment, but tax incentives, they sure can. And when they can't, we need to work and be explicit about what they're supposed to accomplish and why it's worth a negative ROI. If the program is a money loser and there's no valid explanation, the program should not exist. We should jettison that program. So what does a successful program look like? We have a rough framework through the Excelsior Jobs program. It's an example of how other programs should be designed. Hard cap on the number of dollars that we give in credits each year, stringent reporting and qualification process to make sure the incentives are actually worth the help, and really robust reportings and clawbacks built in for people that don't meet their commitments. And for the bulk of the Excelsior program, if you don't provide the jobs, you don't get the credit. And it focuses on paying jobs that can be family supporting in our economy. So these are a framework of criteria that should be designed in every program. And then Senator Skoufis pointed out programs that just aren't being utilized. So those programs should be sunsetted. And we need our economic development system to be transparent. We need more oversight, and we need to prioritize high road economic development. As a Buffalonian, I'm haunted by the specter of Tesla. To great fanfare, the last governor announced $1 billion project that was supposed to be broad and reaching every factor of the Buffalo economy. But in the end of it, over 9 out of $10 for that $1 billion all went to Tesla. And in return, we got a bunch of low-paying jobs in a company that barely meets their job quotas and has really made hardly any other investment. So we don't want seeing that around the state. So it's not just about getting shovels in the ground. It's not just about being in ribbon cuttings. It's making sure that we have an actual economic ripple effect that's measurable. Another program that's touted often is the brownfield tax credit, but that program lacks any local labor requirements and it lacks jobs pay standards. So this report will help us move in the right direction, but now we need to apply what we've learned, and hopefully there will be more to come. But we don't work alone or in a vacuum. We work with partners from all over the state, and it's my pleasure to bring up Michael Kink.